another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today has built a real estate portfolio worth than $150 million and is the host of the radio show, The Traveling Investor. Nizan Mosery joins us today. Nizan, welcome to Purchase to Profits. It's great to have you on the show.
Hi, Seth. Thanks for being on the show. It's awesome. Thank you for having me.
Yeah, but pleasure is all mine. So to kick things off, tell us about your real estate goals right now.
Real estate goals. This year, we want to double what we did, maybe 2.5 times what we did last year. Yeah. Last year, we closed on 3 multifamilies. We used none of our own capital, which means that we used investors' capital. And so this year, we want to do between 6 and 8 multifamily projects. That's
Nice.
our goal for this year.
And what sort of unit count are you going after with these projects?
Well, that's a great question. You see, it's changed. In 2010, 2011, our strategy was a little bit different, right? We were able to go in and into primary markets and buy 100, 150, 200, 240 units because there was competition, but there wasn't a lot of competition like there is today. So we were able to do that in primary markets. Now, and then as competition came in to the primary markets, we went into the secondary markets. Then we went into tertiary markets, continuing to look for the bigger assets. Now, it seems that all the funds and REITs and everyone have gone into secondary and tertiary markets as well. So we've changed our buying strategy a little bit. Instead of looking for the above 100 units, we're now looking for anything between 50 to 120. There's not a lot of competition out there, and I hope no one is going to start buying now because I'm mentioning this. But we welcome competition anyway. But it's that 50 to 100 where people think it's too small. It's not worth the time or the effort. But you know what? If you buy 2, 3, 4 of these, and you can do them fairly quickly because there's not a lot of money to raise, you're usually getting a better deal because it's a mom and pop run shop or somebody that wants to get rid of their smaller property and move to a bigger asset in a different market or whatnot. So you're getting a better deal in that range of unit size. So that's what we're doing today.
Yeah. And you mentioned that mom and pop type of seller. Is that one of the key values you see in that asset where maybe they're not pushing rents as much as they could be? Maybe their operations aren't where they should be?
Absolutely. That's why we're getting such a good value, right?
Yeah.
Think about it. Somebody bought a property, 30, 40, 50 units 30 years ago when they were in their 30s and 40s. They've paid off the mortgage or they have very minimal mortgage at this point. They probably have, like you said, have kept it where the rents are below market because a lot of times in people's minds, 100% occupancy equals security. Mm-hmm. With us, it's then we go in and we see the opportunity of raising the rents, cleaning up the property on the exterior, interior, doing some renovations, and then bringing that property up to market. And because we're going into a strong growth market, the appreciation of the market itself is also going to help us push the rents up, maybe even past our pro forma numbers. Yeah. So we're finding some really good value in these markets. And what's funny is that we're finding that the sellers that we bought from last year are now coming back to us with other assets that they have. And they're saying, hey, you bought my 60 unit. Here's a 75 unit I have as well.
Yeah.
They know that they know that we are, they have a surety of closing with us. Yeah. So it's a good funnel to have.
Oh, absolutely. Yeah. Deal flow is, you can't do any deals unless you have deal flow.
Right. Exactly. Yeah. And that's a great funnel to have because these people are now coming to you because you've performed, right? So now you're having 2 people that are sending you properties, right? The broker that brought you that property because now he knows that you can close. And now the sellers of the properties are sending him property and saying, hey, go back to those people that just closed on my other asset and give this to them.
Yeah.
So, or they have another property and they bring it to us if it's not listed with the broker.
Yeah. No,
So
and that's even better.
it's a great funnel to have.
Yeah. And so what changes have you had to make in your business to go from maybe those 150, 200 unit assets and scale down almost in the unit size? Have you had to shift things around a bit?
We did shift. We shifted the our investing strategy as well, right? What we're going to do to the property. A lot of times, uh, in 2010, you could have bought a property and just sat on it and just run it and not really look at the value play at where you can take it, what value do you have to add to it, because that you're buying it at such a cheap price that hold on to it for a year or two, and just the market itself is going to appreciate and you can sell it. Cap rates were a lot higher, so the properties were cheaper, right? People were scared, right? And there's blood on the streets. What do we do? Oh my God. Now we're finding that cap rates are compressing, right? There's a lot more competition out there. So cap rates are decreasing, and that means that the returns to the investors are decreasing as well. So how do you look at a property, right? What are we looking at now? So we're looking for a value play. We're looking, okay, I'm buying the property here at this particular point in time with the income that it's making, and I'm going to throw on it new taxes, new insurance, and a new mortgage. Can what that property is doing right now, can it afford the new rents? Because we're buying a value add. So, and because the cap rates are more condensed, it's a more of an expensive property. So the cash flow out of the gate is not that great. We got to build it up. So we gotta share that with our investors as well. So they have to get re-educated, right? And we have to look at, can the property sustain the new numbers as is? So if anything goes sideways, we know that what it's doing today, we can maintain that. Yeah. And then we look at what's going on in that market. Where can we take the property? Because if we project too high up too quickly and we don't hit it, that's bad on us, right? Yeah. So we really have to look at the market and see, what is the market doing? What can the market bear right now? And is that enough for us to make a decent return for our investors and for us as the general partners, right? I'm looking to make money in this as well. Yeah. I want to go into a property that is going to make me money so that I can put more of myself into it, so we can make more money so that our investors can make money, right? It's kind of a double-edged sword. I want to make money for my investors, but to do that, I need to make money, right? But we don't get paid until our investors get paid. So it's very tricky. Yeah. So our investing strategies have changed a little bit. We're looking to see what we can take the property to, and then we do our stress test, right? What if we have to hold it an extra 2 years and sell it at a higher cap rate? Will we still make money, or if we have to sell it quicker, sooner, whatnot? So yeah, strategies have changed, and that's why you got to know the market cycles, right? That's why you got to know where your market is on that roller coaster, so you know what buying strategy you can use when you're going into these markets, right? Because you can make money in any market. You just have to know where you are and what strategy to use in that particular market.
That's right. And you've been at this for about 20 years. Is that right?
Yeah, I've been in all types of real estate, office buildings. I've done restoration and renovations. I've done properties, and when I was living in Israel, I was flipping houses in Israel. Did some things overseas as well in South America. And for the last 10 years, been focusing on multifamily, as well as hotels and marinas. Our core business is multifamily, value add, but we bought a hotel and we bought a marina as well, because we see the opportunity there, right? Yeah. Buy low, sell high, right? That's what we're doing here.
That's right. So as you've grown your business, have you developed any routines or rituals, maybe daily or weekly, that helps keep you focused?
Yeah, that's a great question. Routine is very important to have. A daily routine. Now you can veer from that routine, but to have that structure in place, so this is what I'm doing. So I wake up in the morning, and first thing I do is I get my mind rolling. So I throw positive, expanding beliefs into my mind, and any negative thoughts, I just flush them out. I just know that's sorry, and I have a mental picture of me not shooting myself, but shooting the negative limiting belief, and then the new positive belief kind of pops in its place. So I do that, and then I go to the gym. That pumps me up. That pumps up my brain as well. It gets me into like a competitive mode because I see other guys in my class, and so that gets my mind working. And what's amazing is I have investors in my gym class. So we talk real estate. We talk what's going on with our investments, and I share with them what's going on because I'm always networking. I'm always building relationships, right? And then on Monday, Wednesdays, and Fridays, my team, we have our morning call, which happens at 11 o'clock, and we talk about the investments that we have, what we're looking at, any issues that we have, and so forth. Then every Monday at 3 p.m., we have our Monday management calls with all our property managers on all our properties, because we get on Mondays our Monday morning report. So we look at that, we go over, we make sure everything is running right and all that. And every Tuesdays and Thursdays, we do a review. Each one of the partners, we do a review of what happened from now until the past Tuesday, from this Thursday back, right? What we accomplished, what we did, and where we need to move forward. So that kind of keeps us in check. And pretty much every day I'm going over my goals, right? What are my multifamily goals? Where are we with that? What do I need to do? I have other streams of income, so I look at my goals for those and make sure that my direction, the frequency of what I'm doing will match what my goals are and where we are in that timeline. So yeah, rituals are very important.
No, and I'm really glad you shared that, because I think what you just described is a great example for somebody just starting to grow their business, because you are so meticulous with when things happen. Like you said, you're meeting Monday, Wednesday, Fridays, and you've got your calls with all your property managers on Monday at 3. Do you let anything get in the way of those meetings, or are you like, this meeting is happening no matter what?
95%. These meetings are happening no matter what. Mm-hmm. Sometimes one of us will say, hey, you know what, I listen, I'm meeting with an investor. We're under contract for a property. And when we're under contract with a property, we have Monday, Wednesdays, and Fridays, but we also have Tuesdays and Thursdays where we're talking. But we're talking constantly and consistently throughout the day. Texting, emailing, making sure, hey, what's going on? But yeah, it's, I just went blank on your question.
Oh, that's okay. No, I was just I'm so glad you let us into your weekly routine, because I think it's a great example. So speaking of deals and everything, is there one deal that stands out as a keystone deal?
Probably the first deal that my partner and I, Laura, did together as partners on multifamily. That was a 26-unit property in Leesburg, Florida. Leesburg is about an hour north of Florida, and I moved to Florida in 2009, and we saw this property 2010, 2011. So I was flipping houses here in South Florida. It was big. That was the low-hanging fruit. Yeah. So I built relationships with hard money lenders, investors, and so forth, right? Because I'd been out of the country for 15 years. I'd moved to Israel, traveled the world for about 6-7 years. So I'd been out. So I'm rebuilding all my network, and I had to do it very quickly. So when I got this property, when we got into multifamily, I went around telling all my hard money lenders, listen, this is what we're doing. We're now buying multifamily and strong growth markets and blah, 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 blah. Give them the whole spiel. Yeah. And then one day my hard money lender calls me up and he's like, hey, listen, I got this 26 unit in Leesburg. Never heard of Leesburg in my life. You want to take a look at it? I said, no. He goes, look, it's about a 17, 18 cap. I'm like, nah, Leesburg. Don't know much about it. Hung up. A day or two go by, and it's still in my mind, and working. Next thing I know, I'm like 17, 18 cap. I'm like, wow, that's incredible. I called them up again. Make a long story short, we put the property under contract. They were asking $500,000. I negotiated that to $400,000. Right? Mm-hmm. Old woman, her husband died. He took care of the property. It was one of those things where he had it occupied 100%. The property had a subsidy on it from the agricultural department. right? Who knew that the agricultural department gave, rental subsidies?
Yeah.
They do, right? So what does that show you? That you got to investigate. You got to check. You never know where money can come from. You never know, right?
Mm-hmm.
So the day our money went hard, after doing the inspections and everything, we said, okay, we're going to move forward with the asset and close on it. The day our money went hard, we found out that the agricultural department was not going to continue the subsidy with the new owners.
Ooh. Because
the current owner didn't meet the criteria for the agricultural department on the physical the physical property, on how the maintenance of it, the
mm-hmm.
interior, all that. They just let it go to crap, and they didn't tell us. The lawyer knew, the owner knew, the broker knew, everybody knew, but they didn't tell us. So now when we're closing, that property, the value is worth zero because it has no income coming in, because the agricultural department paid 100%. Now, the people, you got to understand the tenants that were living there, the residents, right? They're old, some of them were Vietnam veterans, had pipes coming out of the chests and out of the sides. And you walk into one of these units and they've got 150 pill bottles on their TVs. And they're not going anywhere. They can't afford to go anywhere, but they are now going to lose their subsidy. They're going to lose their rental income. So they're going to be out on the street no matter who buys this property. So my business partner and I were like, okay, you know what? We can't let this happen. We cannot let 26 people, some war veterans and war heroes, get kicked out of the street because these people didn't take care of the property. And because, these people were, they didn't give us the right information. So we got our attorney involved, sent them emails, sent them letters, what you did, you all knew, you hid it from us, it's a gross violation, blah, 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 blah. So now you need to give us time. You need to extend closing until we square this away with the agricultural department or whatnot. So they said, okay. We went, the agricultural department said, no, we're not going to do it. Or they said yes, but they're going to change it now. Before, the subsidy was on the property. Now what they're going to do is they're going to give like a Section 8 voucher to each tenant. And they told us, they said, look, the tenant can use the voucher anywhere, not necessarily on your property. They can move out and they can go somewhere else. We know that they're not going anywhere because we saw the state that they're in. They're not moving. They can't afford to bring a mover in to move their stuff, let alone get new rent and whatnot. Not going to happen. So we said, okay. And they said there's going to be a 30-day lapse of income from the time that we close until all the paperwork and everything, and then the money can get generated. So we said, okay, we can deal with that. And then, so we finally got it, and we're going to closing, and we have 30 days to close. And my partner and I said, you know what, we don't want to close on this property. We worked hard, we got it in there, let's flip it to somebody else. So we found another investor to come in. They bought the property from us at $480. Remember, I had it under contract at $400.
Yeah.
Sold it to them at $480. We got our earnest money deposit back. We got money, we closed, and I believe that they still own the property today. So for us, it was a huge win-win. Win. One win, tenants stayed in their place. 2 wins. Second win, we closed on the property like we said we were going to. Third win, we flipped it and made 80 grand instantly without having to wait, right? And the last win was that we saw that we were able to do it. Yeah. The partnership worked together. We had the right coaching, the sounding boards to help us. We had the right education in place. We freaked out. We freaked out, but we took that freak out, brought it back in, refocused, and just kept moving forward, step after step after step after step. And I have one of the most tenacious partners you could ever meet. If it's not done, then let's continue moving forward. It's done, well, let's continue moving forward. Right? It's just that moving forward. Let's take another step. What's the next step? What's the next step? What's the next step? And it's incredible how you can feed off of that energy, but you also have to give that type of energy as well, or else it's imbalanced. Yeah. So, we were shown that the partnership worked well together, and we were able to overcome this. So that's one of the keystone deals that we did. I mean, there are a few other ones that our investors made. All of our investors made great money on all of our investments, but that's the one that kind of set everything in motion for us.
Yeah, that's a really good story. It's got some twists and turns like a movie.
Absolutely.
Yeah.
Absolutely, man. I don't think I've had one closing that didn't have something go sideways on it.
Yeah. Well, that's the beautiful thing about real estate because you'll get a new situation with every deal. No deal is the same.
No deal is the same. No return is the same. No investors are the same. You know, it's just amazing, amazing the way everything changes, and you've got to be able to roll with it. You got to be able to, to be like water, right? Just fluid. Okay, boom, 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 right, and just go. Mike Tyson, right? The great Reverend Mike Tyson has a great saying. He goes, "Everybody has a plan until they get punched in the face."
That's right.
Right?
Yep.
So
Yep.
in multifamily, in any business, right, where you're raising capital and you're doing, and it's project based and things can go sideways, you always want to have plan A through Z lined up, and then go just like on Excel spreadsheet, then the double A's, all the double Z's and the triples, and you want to make sure because things will go sideways.
Yeah.
And you
No,
got to be prepared.
yeah, that's certainly some good advice. So since you got into real estate and especially the multifamily side, how has your life changed and benefited?
Ah, that's a great question, and it's it's benefited my life in the fact that I can work from anywhere. Even when I was flipping houses, I didn't have to be here. Once I had my crew in place, right, and I taught them what I wanted as a completed product, right? It's very important. Even now, when we're buying multifamilies, right, and we're renovating the interiors, we'll finish one, and we'll bring in the property manager, we'll bring in the leasing. This is what the final product looks like, so there's never a mistake,
Hmm.
right? So I can work from anywhere, right? These new little things here, right? This is the new office. I can do everything from here. I can sign contracts because I even have a little doodah pen that comes out. I can sign contracts. I can make corrections on it. I don't have to use my finger and do all that. So I can go hiking. 2 summers. Every summer we go away. Last summer we were in Chicago, Lake Michigan. Then we were in Virginia. Then we went skiing in Chile. The summer before that we were in Poland, Germany, Norway, Israel. Ended up in Boston. Meanwhile, last year we closed on those 3 assets, and while I was traveling, we were in the middle of closing deals, raising capital and doing all that. So it's benefited me by being able to have the freedom that I can be with my family and go wherever I want in the world and still move my business forward, right? My goal was to create a lifestyle business. I had a lifestyle that I wanted to live, and I said, okay, how do I create a business around the lifestyle that I want rather than creating my life around the business that I have.
Yeah.
Right. So that's how it's benefited me. It's introduced me to incredible people. It's opened up my world to more investments, different opportunities. One of my partners and I were working on a solar farm
Oh,
that we're
cool.
building. Right, alternative energy sources. So through real estate, I've been able to go out and to branch out into different things. It's helped me with my family. We get to go and travel places, and just the freedom that it gives. Right, multifamily, commercial real estate, rental properties. You do it once, and it pays, and
Yeah.
it pays, and it pays. That's why it's so difficult to sell. Because when you're selling a property, right, it's like, oh, that income stream. I got to replace it now. I got to go out and buy another one,
Yeah.
right? So that passive residual income, after we're done here, my assistant is coming and we're going to go to the beach and we're going to do some brainstorming at the beach because I'm about less than half a mile from the beach.
Why not?
So why not? Why
Yeah.
sit in this office when we can go to the beach?
Yeah.
And that's the lifestyle. That's the beauty of it. So
Yeah.
that's the benefit of it.
Yeah. And looking forward, let's say 5 years, how will your business be different then?
Oh, that's a great question. We will be producing more. We will be closing more. We will own more. I have my goals set. We want within the next, what is it? We're in 2019. So yeah, by 2021, so another 1,500 units, which is not crazy. Again, my lifestyle is that I don't need to kill myself. I don't want to kill myself, right? I'm doing this because of the enjoyment, because I have a goal. I want to see how big this thing can get. I'm not going to kill myself, right? I've also started a consulting program, a consulting company where I go out and consult people. I have programs for like 90 days where I show people exactly what I did. I teach you how to manifest and create the life that you want through certain steps that I've learned while traveling the world, meeting with successful people, and then showing people how they can passively invest in commercial real estate and create a passive residual income where they don't have to do anything. They can continue at their job, working, or their company, and take their money and invest it in multifamily, and then they get a quarterly check. And once you do that a couple of times, then you can then, get your investment income up to where your salary or where your other income is, and you can drop that. And now you're living life, right? Because for me, the definition of wealth is not how much money I have in the bank. It's not the position I hold in the company. It's how much money do I have rolling in every month without me having to do anything for it.
Yeah.
Right? Because then I can go sit on the beach and not worry about it. I can go hang out with my kids and not worry about it, right? That's the beauty of it, right? And there's so many ways of doing it. I know a lot of people, they go out and they bought a fourplex, right? Not crazy. They bought a fourplex, them and one other friend, right? They came up with the money. And then they said, all right, this unit will cover our electric bill. This unit will cover our water bill. Great. Now, what other bills we got? We got our mortgage. We got our car. All right, let's go out and buy another. Boom. And they were just replacing the bills that they had to pay. Mm-hmm. And next thing they know, all their bills are paid. And they don't have to do anything about it. Like, wow, this is awesome. This is a great philosophy, a great strategy, right? Mm-hmm. 85% of American millionaires made their money in real estate, became millionaires in real estate because it's always going this way. It's always going up and up and up and up and up, right? Yeah. So, yeah, it's awesome.
Yeah, no, I love real estate. I could talk about this all day long.
Yeah, absolutely.
Yeah. So, Nizan, if somebody's looking to get in touch with you, learn about what you're doing, maybe invest, where can they find you?
Sure. My website is www.investwithcip.com. It stands for Cornerstone Investment Partners. You can also go to, for my consulting programs, you can go to www.thetraveling-investor.com. And I'm on Instagram as a traveling investor. I'm on Facebook as a traveling investor. On Twitter as Travel In, because they give you a short thing. I'm on LinkedIn as well, so you can look me up. Feel free. My email is Nizan, Nizan, @investwithcip.com. And feel free to reach out. Absolutely.
That's great. Well, Nizan, I just want to say thanks so much for taking the time today and sharing your success with us.
Thank you, Seth. I appreciate it.
Yeah, pleasure was mine. And to you, our viewers, I wish you well in your journey from purchase to profits. See you next time.